What are your thoughts on gold's performance during this conflict? Typically, people would think that gold would be would perform well when there's global chaos like this. And we did see a sell-off. We do see that even some central banks have been liquidating some gold to get liquid. I mean, folks need dollars, folks need energy and such. And so curious on your thoughts on gold's performance during this time.
Yeah, I think the challenge, of course, is that it ran so much ahead of the crisis. There's already in kind of a local bubble territory. So I've been on the record that I don't think it's fundamentally overvalued, gold and silver. I think it was a repricing from being undervalued to closer to something approximating fair value. But when you move that quickly, sentiment can rise very sharply. A lot of fast money can go into the space, and fast money can go out of the space quickly too. When there's a risk-off situation, when that money's kind of better elsewhere. And so the problem is something is often not a safe haven when it's tripled in price in a short period of time. And I think that's the biggest challenge. I mean, people are saying it's no longer a safe haven. I disagree with that. I just think, again, when things go up that quickly, they can go down pretty sharply. I think even in a prior conversation, you were asking me about $100 silver. It was back before, I think we were at like, say, $60 silver, and you're like, could it go to 100? I'm like, it could, absolutely. But it can also, I wouldn't be shocked if it goes to 100. I wouldn't be shocked if it goes to 40 first, right? I was like, it's like, I had a very firm bullish view on silver when it was like 17 an ounce. But once it's gone up multiples, it's not that I think it's overvalued. It's just that the asymmetry is gone. With silver, we end up we soared, and then we had some of the biggest sell-offs like ever, and then stabilized. And that's the risk when you've had such a strong upward move. And gold less extreme, but a similar thing. And then people also wondered, well, okay, why didn't Bitcoin sell off? It's usually a risk-on asset. Why didn't it sell off amid the crisis? It's like, well, it already had the opposite problem. It already sold off a ton in late 2025 and early 2026. All that fast money is already out of this ecosystem. The coins are held by pretty strong hands. And so there's not a lot of money that is still there to get out. And so it holds up surprisingly well. I mean, who would have thought, okay, the US attacks Iran, we have the biggest energy shortage in the world, and Bitcoin outperforms gold for a month. Who would have thought? But it's like when you get very overbought in one and very oversold in the other, things can happen. And similarly, like people were like, oh, does this mean Bitcoin's a safe haven asset? My view is no. It just means the fast money was already out. And that's part of why I hold both. They go through their own cycles. And so I'm still structurally long-term bullish on precious metals and Bitcoin. And they kind of move to their own drum, and you just have to be careful of overbought, over sentiment periods of time, in my view.
What are your thoughts on the gold mining companies? I know that you've had them in the past. I know you've had some exposure to some royalty companies as well as some of the miners. And the thing with the miners is like many analysts would say that they're still undervalued because now they're printing a lot more cash at higher gold prices. I had a conversation with Kai Hoffman earlier this week, and he mentioned that the average price of gold per ounce was about 4,100 for Q4 of last year, and I think the average price for Q1 of this year was somewhere upwards of 46 to 4,800. I forgot the exact number, and so curious to your thoughts on the miners moving forward.
So I have a similar view, which is that years ago I was very bullish. I viewed it, there's a ton of asymmetry. As you've seen this kind of sharp rise in gold and silver, we had eventually, with a lag, we had a sharp rise in the miners. I at that point trimmed my GDX position. I'm still long in some portfolios, but I've kind of used the opportunity to rebalance and right size those types of positions. Prior to this conflict, so obviously miners, they mine gold, and a big chunk of their expenses is energy. Not all of it, but a big chunk of it. And so prior to the war, when you have a sharply rising gold price but pretty cheap energy, all else being equal, that's pretty good for miners. But then when you risk an energy crisis, and when gold eventually stops going up, I mean, that obviously challenges some of the assumptions. Um, if someone has a structurally bullish view on gold, especially more than energy, if they think gold's going to 10,000 while oil stays, 150 or less, then probably miners still have room to run in the years ahead leading up to that view. But if someone thinks gold chops around at 4 to 5K for quite a while and energy chops along, then maybe miners chop along as well. I wouldn't call them expensive. I just think there's quite a bit of risk there. Some of the asymmetry is gone. So I kind of made the decision to kind of lead that space a little bit more to people who focus on it. So I rode what I viewed as the more macro portion of that, which is you buy a generational bottom in miners, you let it run for a long time. Inevitable things tend to take a little longer than you think, so you wait a little longer than I thought. It eventually soared, got multiples, and now I have a less convicted view because we've already had a big run, and I leave that more to specialists that can go stock by stock, find all the undervalued ones, find the ones with good geology, good jurisdictions, good value for the risks and the opportunities that they have, good management. So I mean, I think there's still opportunity in the space. I just think you have to be careful.
Yeah, and just your thoughts on me. I've been buying Bitcoin as it's had a lot of weakness. I mean, 50% off the highs and such. So I've been building in my position there. I'm also curious about the the next phase. So like we've had like a huge run up. I mean, you had United States president show up to a Bitcoin conference and such. Some folks believe that was like the ultimate bullish signal, and then it reached 125,000, and it's topped out. It's never going to get there again. Like, how much more bullish could you get? But what I'm seeing on the back end is like there's a huge focus around this real world asset tokenization. I'm seeing more tokenized gold products come to the forefront. Even Tether being a investor in some of these royalty and streaming companies and buying physical gold, and they have their gold backed asset as well. And then I'm also seeing that Morgan Stanley just came out with their Bitcoin ETF and such, and so it seems like there's still some activity in this in the financial realm around the Bitcoin crypto real world asset tokenization space. And so curious if you keeping your eye on that and what you're seeing there.
Good set of questions. So I would separate temporary hype from structural adoption. The president attending a Bitcoin conference was good for the price that year, but really it's about structural global adoption. So I mean, by many metrics, it wasn't even as hyped as 2017 was when that happened, or even 2021. So his appearance in 2024 at the conference. And I mean, since then, I mean, the Trump family has been very much in kind of crypto, even like meme and kind of scam type stuff. And I think that's kind of on brand. So I viewed it less as bullish for Bitcoin and more kind of, it was the signal that it's bullish for deregulation of the space. So the prior administration and Gary Gensler had kind of an adversarial approach. Even for the spot Bitcoin ETFs to allow it to exist, they had to get sued. The SEC had to get sued because they were kind of viewed to be capricious in their like arguments against it. They were also doing kind of like regulation through enforcement. They were kind of not giving clear guidelines for what a crypto security has to do to have a clear path forward. But then when they try things, they would potentially get sued by the SEC. So you went from kind of an adversarial environment to kind of a sort of like a golden age of fraud environment. It's almost like the pendulum flows around. It kind of opened the doors to meme coins and kind of grift. I've had a view for a while. I separate Bitcoin and stablecoins from kind of the rest of the space. I think that broader crypto is kind of stagnating. going forward. I mean, it has ups and downs, but I think it's generally structurally stagnating. And I think the areas of opportunity. I still think Bitcoin is going to be a larger network. I don't think the $2 trillion market cap that it reached was the peak. I think it'll go higher because I think there's a demand for a decentralized ledger backed by energy and kind of a portable store of value and permissionless payments. I think that there's a lot of demand for that. Um, and there's self-reinforcing network effects. Kind of like how when you have simple mail transfer protocol or TCP/IP or Ethernet or USB, when you have a software or hardware protocol, these things tend to be very self-reinforcing. It's a winner-take-all or a winner-take-most market. And I think Bitcoin is basically the protocol of value in that sense. Stable coins. So the broader topic of tokenization starts with dollars. Stable coins have been around since 2014. I've been bullish on those. The market cap keeps growing because people want dollars, and it's kind of like a stablecoin compresses the overhead cost of having an offshore bank account. Anyone with a smartphone now has the equivalent of an offshore bank account with stablecoins. Downside, of course, is that because they're centralized, they can be sanctioned at any time. But if you're in a country where that's not a risk and you want dollars for working capital, those are useful. It's a useful technology. Tokenized gold has been around since at least 2018. There's Paxos Gold. There's Tether Gold. Back in I think it was 2020. It was like 2020, 2021. I owned some. So I mean that's useful. It's kind of like how, for a similar reason that some people want gold ETFs. I mean they're not a replacement for physical gold in your own custody, but for certain pools of capital, they might want that. And the cool thing about tokenized gold is it's not tied to one jurisdiction. You can bring that around with you rather than it being just tied to, say, the American financial ecosystem or something. So I do think that tokenized gold is a valuable thing. I'm a venture investor in the space. I mean, one of our companies tokenizes assets. Including securities, equities, to make them more available to the world, right? So it's pretty easy to buy stocks, American stocks, if you're in America. It's not that hard if you're in kind of another developed country. It's a little bit harder if you're in a developing country. And so tokenizing equities or tokenizing attractive securities can make them more accessible and can make them trade 24/7. And so I think that there's some legs to that. I don't think it's like I think there's a limit to how much it'll spread, but I do think that it has more room to go. So I tend to be bullish on Bitcoin and then the tokenization of high quality assets, whether it's stablecoins, gold, or certain equities or securities. And I tend to be more bearish on the meme coin space, the DeFi space, NFT space. That's where I tend to be more structurally bearish.
So for me, I don't, outside of Bitcoin and a few real world asset tokens, I invest, but I've also been more focused on a really good friend of mine, Benjamin Damazi. He talks about the analogy of owning the roads and the toll booths rather than owning the vehicles on the roads. And so, I've been investing in, companies like a Coinbase or some of these others that profit, whether it's a bull or bear market, companies that own the New York Stock Exchange, things of that nature, because it seems like they profit whether it's a bull market or a bear market. And so those have kind of been some of the ways that I've been playing that space as well. And so, I appreciate your thoughts on that. So Lyn, I appreciate you coming on the show and everything and giving us an hour of your time. Where can people follow you and connect with you?
Of course, thanks for having me. People can check out lynalden.com. They can also check out my book on money, Broken Money. And then for those who like sci-fi, I actually wrote a sci-fi book.
Yes,
We all need
yes.
hobbies. So I wrote a sci-fi book called The Stogard Incident. And it's a near future sci-fi that people can check out. In addition to all this financial talk that we do.
Yeah, for sure. Yeah, I have it on my desk at home, so I gotta crack it open soon. So I'll be sure to do that. Thank you, Lyn, for coming on the show and everything. And you all be sure to go check out the Stogard Incident as well as Broken Money, and check out lynalden.com. Hit the subscribe button if you haven't yet. Love to have your support. Thank you all for watching.